All right. Good morning, everybody. Happy Thursday. This is the morning show here on Stock Market TV. Spencer, JC, Steve, Alfonso, Sean, with you this morning. We'll talk about, of course, Nvidia. Quite overnight range in Nvidia. Interesting, right? Interesting. We got a lot going on today. A lot on the earnings front. It's like the last hurrah of the earnings season, right? Like you thought he was dead and then back for one more, and then gonna die again. But yeah, I mean, Nvidia, Salesforce, Affirm, which we briefly discussed in the Nvidia stream last night, Best Buy, CrowdStrike, Berkshire Hathaway, not earnings, but we'll talk about that because it's interesting. $1 trillion, go Berkshire. As far as today's guest, new guest on the show. Love having new guests on the show. James Brodie, Onyx Capital Group. He is joining us from across the pond. We appreciate that. He'll be on at 9. We'll have Sean McLaughlin on around 9:30. Talk about his options trade that he made like at the bell yesterday, the closing bell. And that's what we got. We got Kenny here, and he's back from the beach. So let's go. What up, chat? How we doing? We good? All good? Yes? Okay. Onward.
All right, We're back. Happy Thursday. Happy Thursday.
Hey guys.
What a live stream yesterday for such a nothing burger. Not to give us too much credit, but we had, I don't know, like 25,000 people watching yesterday, and we just told everybody what a waste of time this Nvidia earnings hype was. No. We didn't say it was a waste of time, but I think we helped put things in perspective. We were fading that hype, buying treasury bonds, looking for the next Nvidia, right? While still, and I'll give myself this credit because I'm the one that's been the loudest of all of us, I still think that was the most important earnings of all time. Is that all right?
Yeah.
It could be all of those things. It could be overhyped and still be the most important earnings, right? Do I have that right?
That's right. No,
all right, so we got a big nothing burger in Nvidia. Well, and I said it before, and I'll say it again.
A nothing burger in terms of the reaction, maybe.
Which
right?
is all that we're interested in, Spencer, for the record.
I don't know. Is down 3.5%? Is that a nothing burger?
Yes.
Okay. I'm just asking. I don't know.
Considering it was pricing in an 11% move, and it is a quarter of that.
Yeah.
By definition, that is exactly what a nothing burger is.
All right.
I'm more interested in the price action in the other semiconductors, though. Some are down, some are up. This is interesting. And NVIDIA now gives us a really nice setup here. If this thing shakes lower and then back into that bull flag range, which I have a feeling it will because the VWAP from the highs from just June come in right here, where price is sitting right now around 120, we could get a little shake and go. You know?
Bake, little scoop and score?
Yeah, why not? Why not?
All right, let's talk about it. Spencer, hit it.
Shake and bake. That's what it's called. Shake and bake.
Shake and booyah.
All right.
All right, ladies and gentlemen, we have the Dow futures up 284 points this morning. That's over 2/3% for the Dow futures on the day after Nvidia reports earnings. Fun fact, Nvidia still not part of the Dow, but I think it will be soon. S&P futures up 1/3%. Nvidia represents over 6% of the S&P 500. The S&P 500 is up 20 points, 1/3%. The NASDAQ 100, of which Nvidia represents 7.5% of, is also up over 50 points. That's 1/3%. Bond futures flat this morning, right at 124 on the 30-year. Crude oil up 0.75%, back at 75. Copper still at 420. Boy, does Dr. Copper love that 420. Gold up 0.25%. 25.50. Silver up 0.5%, just under $30, with the volatility index under 16 on the VIX. And then, of course, over in the old funny money, you got Bitcoin up 2% this morning, above 60,250. Ethereum up 1.5%, 25.70. Solana up 1.25%, 145. Binance up 1.25%, 544 with the total crypto market cap. Spencer Israel 2.075 trillion with the Bitcoin dominance still above 57%. What stands out from the futures?
So it's a Dow Russell kind of day. It looks like, but that could change drastically come the close, or come, just come midday today. The tech stocks need to open, and Nvidia and friends need to kind of figure out if there's a direction off of this. I think there might be.
Ooh, I like that. I like that phrase, Nvidia and friends.
Nvidia and friends.
Nvidia and friends. I like
Nvidia
that. What are the big movers in the semiconductors this morning?
Well,
Broadcom's flat. Broadcom's down less than 1%.
Hold on, I got you. The ones that were moving after the bell, no longer really moving here.
Taiwan Semi down 0.5%.
There are no big movers.
No,
There's nothing happening. ASML is up 1.5%.
That's fun.
Yeah. I'm looking for any sort of big move here. There's really nothing.
AMD down less than 1%. I mean, you want to talk about a nothing burger? You were asking me, Spencer, is this actually another? Yeah, this is like the definition of a nothing burger.
Am I seeing Dell down 5% though? Is that right? That stands out. That would be
that's earnings. That's earnings.
Oh, yeah, that's on them. That's not on Nvidia, right?
So really nothing in sympathy either. Interesting.
Throw up slide 3, and we'll talk about what's happened here over the last 24 hours or so. You've got yesterday, the low for the day yesterday. Here, why don't I have
50 billion new buyback authorization though? That's not nothing. I mean, I know they're big, but love to see it.
The low yesterday was right around 122, just under 123. That broke after hours, got down to 115, bounced all the way back to flat in the after hour session, and it's kind of hanging around 121 right now, which puts Nvidia down about 3.5%. This is the range that the options market was pricing in. It was about 11% move. That's 14 points in either direction. And so 14 points in either direction. And right now it is moving 4 points. So premium sellers made money. Sean's going to come on here in a minute and talk about what the strategy is for the trade that we put on yesterday. The whole goal all along, win, lose, or draw, was to get out within the first half an hour of today's session. And I believe that Sean requested yesterday in the Slack to come in earlier than usual. Did you get that request?
Yeah, he meant around the open.
Got it. So are we going to accept his?
Yeah,
we're going to accept that. Okay.
What else do we have to do at 9:30?
No, we can tell. Yeah. No, I'm with you. I'm with you. Strazza, are you surprised that the most hyped up earnings of all time, whether it was justified or not, because we'd argue that it was justified, but that doesn't change the fact that it was the most most hyped earnings ever. Are you surprised that this nothing burger came in and those fading the hype were the ones who made the most money?
No. So that's, I believe, not an options person, definitely not a trade earnings options person, but I think the probability is stacked in your favor.
By a long shot.
Yeah.
Yeah, the Nvidia implied volatility had never been higher.
So not surprised. That's usually the right move. I just continue to be blown. Like I'm still picking through the report, and this is nothing new.
You listen to the conference call, or you don't do such things?
No, I'll have it on. I'll have it on in the background today. I was tired when we finished up yesterday. A lot of TV for me. But I'm just still picking through the report, and my mind is blown at the numbers. Still, I've been looking at these reports for 5 quarters now, and it's still like hard to believe sometimes. So they had 30 billion.
As somebody who's just dumb, somebody who's dumb when it comes to this sort of thing, tell me what's so impressive about it.
So they had 30 billion in top line, about, Spencer, right?
30 billion in quarterly revenues. Is that what that means?
Guess how much of that?
Is that a lot? 30 billion in quarterly revenues?
Yeah.
I don't mean to be obnoxious. That's like a legit question. So 30 billion in revenues compared to what? Like, give me another company and what their revenues are like.
There's 2 companies that do more than that at this point.
Who? Google?
I think it would be Apple and Microsoft.
Apple and Microsoft?
Well, JC, if you want to just compare Nvidia to itself, right? 30 billion in quarterly revenue for last quarter, right? Go and take the same quarter the year prior, it was 13 billion.
Wow.
Yeah, it's the
Did
growth.
I get that right?
It's
I got that
the
right?
growth.
Yeah.
Yeah.
And then the year prior to that, 6.7 billion.
Wow. Line goes from the lower left to the upper right, in other words.
So,
I
yeah.
know that one.
Google's got a lot of quarterly
But
revenue.
this is good perspective
Amazon
because
will
I don't
have
know what
more
$30
also.
billion means. Like, is that a lot or a little? But that helps put things in perspective,
It's a lot.
Spencer.
But here's what matters. It's becoming a margin cash flow story. Their operating cash flow, so the cash that they generate from those revenues, 15 billion. They're getting half of that in cash. I mean, it's really crazy. This is real money. This isn't like the .com bubble. Like it's really wild.
So you know how we make fun of the analysts because they just make it so easy for us to do so. And we talk about how the companies didn't miss. It was the analysts that missed. The companies didn't miss anything. It was the analysts that missed. In this case, correct me if I'm wrong, the analysts were spot on.
Yeah.
The analysts were spot on. It was the options traders that got it wrong.
The analysts, listen, the estimated numbers are not the market expectations, right? If the estimated earnings numbers were the same exact thing as the market's expectations, then every time a stock beat top and
That's a good
bottom,
point.
it would be higher, and every time it missed, it'd be lower. However, we come on here every morning, we talk about this one missed, but look, it's up 10%. That's on you, analysts, street estimates, right? What is all that? I don't know. But the market expectations not exactly the same as the estimate.
It's a good point. And JC, with regards to Nvidia, the analysts are not going to miss on this because every analyst is bullish.
And then they're going to chase and revise higher. They're both probably conservative.
Can we get Dan Ives on the show? I want to talk to Dan Ives. He's a cool dude.
You want to get Dan? I can reach out to Dan Ives.
Yeah. If he ignores you, you tell me and I'll get him. All right.
So then, of the 15 billion in operating cash generated, listen to this, shareholders, all of it was returned to you in the form of either dividends or buybacks. That's just the kind of company you want to own. It's the kind of company you just want to own. You stick it away. You say, you're mine for a long time. It's really good stuff. It makes me happy.
All right. Listen, if it makes you happy, Strazza, it makes me happy, right? Nvidia earnings report and some croquetas, and Strazza is in heaven.
I would let Jensen Huang sign on my boobies.
You would let Jensen Huang sign your boobies?
I like it that much. Yeah,
all
exactly.
Right. Well, your boobies keep getting bigger with all those croquetas. Can we just talk about something that is getting completely unnoticed?
Mm-hmm.
I was watching the documentary that Spencer recommended, the one about the boy bands.
Yeah, you watched it?
I watched it. It was entertaining. I learned a lot of things about that era that I didn't know. Like I remember, like my high school girlfriend dragged me to one of these Backstreet Boys concerts back in the day. We went with a bunch of couples. It was terrible. Awesome. So I remember those things. And some of these band names that came back, I'm like, whoa, whatever happened to those people?
Mm-hmm. Mm-hmm.
Anyway, so I'm watching this whole thing, and I didn't realize that this Lou Pearlman is the guy's name. Lou Pearlman.
Yeah.
He was just the guy that would bring bands together. He brought back the Jackson 5.
He was the money guy. Yeah.
He brought back the Jackson 5, and they played in New York, and it was like such a big deal the night before 9/11.
September 10th. And nobody remembered. Nobody remembered.
Nobody even found out about it because obviously the world ended the next morning. Not that this is that dramatic in that nature, but yesterday, while everybody's focusing on Nvidia and everybody wants to talk about Nvidia, how about Uncle Warren hitting $1 trillion? How about that? Come on.
That's pretty good. It's pretty good.
Not bad. Uncle Warren, $1 trillion in market capitalization. Wow. Can we give Uncle Warren a morning show round of applause? We don't always give, flowers like this. We're usually making fun and having a good time and everything like that. But like on a serious note, guys, come on. $1 trillion for Uncle Warren.
Look, I think he belongs in the $1 trillion club. I think that's super awesome.
What took him so long?
So that's market cap of Berkshire?
$1 trillion, my friend.
Yeah, I have to look at it and like add numbers here.
I just did it for you. What do you mean?
Oh, I know.
Add numbers.
I trust you. I'm not gonna. It's too early for me to add these numbers. So now it is the sixth largest.
7th.
Who's larger?
There are 6 companies larger: Microsoft, Apple, Nvidia, Meta, Google, and
That's it.
Amazon.
Amazon.
6
I didn't realize
companies.
there were 7.
Yeah.
Huh.
Eli Lilly is behind. Eli Lilly's not a trillion.
No. Close though.
Sorry, fat pill people. Uncle
fact
Warren's
that-
got you beat.
The fact that it's close, though.
The fact that
Lilly's
it's close
close.
really says a lot about Eli Lilly.
Broadcom is close. Tesla is close. JP Morgan is getting close.
Yeah, let's play this game. Let's play this game. Ready?
Walmart.
Apple. Ready? Apple 3.5 trillion. Microsoft 3 trillion. Nvidia 3 trillion. Google 2 trillion. Amazon 1.8 trillion. Meta 1.3 trillion. Berkshire a trillion even. And then behind that you got Eli Lilly at 900. Taiwan Semi at 870. Broadcom at 730. Tesla at 660. And then JP Morgan coming in at 630. Walmart 612. That's up there. United Healthcare 550. Visa 530. Exxon 520.
Tesla gets an asterisk because they used to be a trillion, right?
Who? Which one?
Tesla.
Tesla's like
Tesla was a trillion. Yeah.
Been there, done that.
Tesla retraced 61.8% of the entire rally off of those lows.
There's a point in every cycle where I start looking at market caps and I try to tell myself, stop looking at the market caps. And we're pretty much there. JC, we've been through this. We did a video years ago.
Why do you say stop looking at the market caps?
Because I look at them and I go, this is crazy.
What's crazy about it?
They get really big. So the thing that happens to market caps during bull markets, they get inflated, right? Like we call it valuation, right? So those market caps will get so big.
Aren't you the one who's telling me that Nvidia keeps getting cheaper as the price keeps going up?
Yeah, right. So that's why I'm telling.
What are you talking about?
Are you listening to the point I'm making? I look at the market caps and I go, that's insane. And then I go, Steve, stop looking at the market caps, right? It's noise, but it's hard, man. Dude, I mean, where does the biggest market cap get to before this thing's over? This cycle. So a year or two from now, we could have one of these at 5-6 trillion.
For the record, we will, in my opinion.
Crazy though.
Which one gets to 5 trillion first? Go. Which one gets to 5 trillion first? Get in the chat. Anybody want to weigh in? Who gets to 5 first?
It's Nvidia.
We'll ask.
In this trajectory, it has to be Nvidia. I don't think they stay there. I don't think they hold that number one position.
You think Nvidia guarantee is the first one to? By the way, Apple's already at 3.5.
Yeah, unless something special would have to happen for Apple or Microsoft, right? Like, there's nothing in their business that'll get them there this cycle.
Isn't Apple dropping a new phone or something like that?
It would have to be something like great with the Vision thing, right? Which I'm ordering. Or
you're gonna order the Vision Pro?
Yeah, I'm gonna play with them. Mm-hmm.
It's expensive.
What? I don't know. I have an Apple gift card. I got nothing to do with it.
I don't know how big your Apple gift card is, but I don't think it's gonna make a dent in the price. I heard don't waste your time. Wait for the next one. I heard don't waste your time.
No, come on, it'll be fun. Plus, I don't like standing here all day and staring at my computer. If I could lay in bed and work, that's sick.
That's some fat boy shit right there. Can anybody? So what do you think, Nvidia or the field?
Nvidia.
No, we know you think that. I'm asking the chat. Thanks.
It's Nvidia. There's nothing that gets the others to 5 this cycle.
That you know of.
Yeah, exactly. It would have to be new news. It would have to be new information.
So the most important thing that happened yesterday was not Nvidia earnings. It's Berkshire Hathaway hitting new all-time highs. And for those who are wondering why is Berkshire Hathaway doing so well, Spencer Israel, if you could throw up the new slide 2. Slide 2 here is the star of the morning show, according to the chat. The new slide 2. What is inside of Berkshire Hathaway? It's a lot of financials and a lot of industrials. What do you know?
There's a good amount of insurance too, my friend.
And are insurance in financials, or are they technology stocks?
I wasn't listening. Okay, yeah, that's a good point.
Another fun fact, right? So this goes, this transcends countries here, transcends borders, if you will. When we talk about Berkshire Hathaway, why is Berkshire Hathaway doing so well, right? Well, first of all, it's not only 7 stocks that are going up, right? There's a lot of stocks that are going up. Financials and industrials are loaded up in Berkshire Hathaway. To Strazza's point, a lot of insurance, a lot of reinsurance, banks too, a lot of stuff, right? What a great business, that reinsurance. When you look at the German DAX, the joke this week on the old internets was that what percentage weighting does Nvidia have in the German DAX?
No, it's zero. It's actually
and
zero.
The answer is zero, obviously. Funny, haha. What's in the German DAX? It's a lot of financials and a lot of industrials, right? And so when you look at something like, as a matter of fact, you've got 19% industrials, you've got and then financials almost 20%. Largest two components of the German DAX, almost half of the German DAX is just financials and industrials. So when you look at Berkshire Hathaway and you look at Germany and you're wondering what's driving those things, here you go. It's the exact same drivers. Is Berkshire Hathaway and the German DAX not just the same play here?
They're built the same, my friend. It's a great point.
That was a great point, right? That was a good point. That was a good point. Well done, JC. Well done.
Wow.
Shall we bring in a one Kenny Glick?
Yeah.
I think we should.
Yeah.
We should.
It's been a long time coming. They ain't come from my club, they took it. Putting up numbers, 99 problems, and I still kept it 100. Hold up. Yeah.
Kenny Glick, how was the beach, my friend?
It was all right. And just one recommendation. Don't talk about German DAX in the morning. This is a family show. All right? Come on.
He's right.
What's up? What's up?
Well, you've got the NASDAQ 100 futures up 1/3%. You've got the Dow Jones Industrial Average up 2/3%. You got gold flat. How about copper? Just Dr. Copper and 420. Just they can't get enough of each other, right? You think that's a coincidence? This is a simulation, right?
I don't know, but you're in my head, man. I was going to talk about futures this morning as the first thing that you said. So if you're like me and you don't sleep, again, the older you get, you older men out there know what I'm talking about. We're up every 3 hours.
Are you peeing a lot? Is that what's going on?
That's what happens. That's what happens. No matter what, doesn't matter.
All right.
3 o'clock, it's 5 o'clock. Next thing you know, I'm praying to go back to sleep. By the way, we're long ASTS from 2750 again right now if anybody wants to participate. But I want to show you a chart, my friends.
Show me.
NQ futures. You know I love the Qs. And if you trade futures and you use VWAP, it's even more cleaner, if that's a word, cleaner and just more precise. What you're looking at right now is perfection. So we had the Nvidia came out. I'm at the beach. I'm like, all right, cool. The dip will be bought inevitably. And the dip wasn't bought right away. But just like we talked about yesterday, the market has to kick the last doubter out. And look at this beautiful move. It kicks that last person out. Okay, we got that dude out. Now let's rally. Here comes the VWAP shuffle and the jiggle.
VWAP shuffle and the jiggle.
Little break. And if you set your computer to then only sell if the VWAP gets violated again, and to sell only if it goes down below the VWAP, and you're looking for it to retrace back to prior day VWAP, hi. The market's rigged, friends. It is. And there it is. Once again, every day we see it. The rigging is real, and it's rigged to price, and it's rigged to VWAP. Enjoy it, love it, live it, learn it. And I do that. This is it. I wish I would have done better. This is incredible. We see it every day. And when you come in the morning and you've already had a couple of futures trades, and now you could use that money to go play with your ASTSs and your weird stocks that you want to trade in the morning. This is the greatest trading. Other than that fake crash bullshit at the beginning of the month, this is legitimately the greatest trading I've seen, ever. It really is. And I say that a lot. This is it. It's very clean. It's very precise. And again, we just use numbers right back at the algorithms. That's the way to participate.
Kenny, we want people to remember this. And we're getting some requests from the chat. If you can sing that song, the VWAP song, getting some requests from the chat. And we want this to be memorable. You want people to know what's going on. Can you, please?
What happened?
I'm asking you to sing. I watched the Lou Pearlman documentary last night on Netflix, and what he would do is that he would bring his band members and he would tell them to sing, right? So that's what's going on here.
When you walk through the storm, hold your head up high. All right, that's it. That's all I got for you this morning. You have
What
to come
about
to
the
the
Little
chat room.
Indians with the VWAP song?
You have to come back. No, I'm only singing Tom Jones today, and that one's going out to the futures, man. That
I didn't get the memo that only Tom Jones on Thursdays. I
only
didn't
Tom
get that
Jones.
memo.
Tom Jones Thursdays. Now it's a thing.
Now it's a thing. Tom Jones on Thursdays. All right, folks. I did the best I could. You're gonna have to wait till next time to hear the VWAP song, right?
Yes. We got to know what I want. I need a recording of 10 Little Indians, and we'll make a little recording about it, and you'll just press play. It'll be awesome.
Spencer, can you make that happen? Can you please hook him up with Giancarlo? We can have that by lunch, Kenny.
And then we'll do a little animation. We'll have some fun. Come on, we're
All
having
right.
fun this year. Fun this
Market
time,
zero,
right?
Smokey.
All right, y'all. I'm out of here. I got to
Give me
get
one
back
more,
to
Kenny. Give me one more.
conquering the world. Oh, I'm looking at Dollar General. I love a disaster. DG getting smoked. And by the way, if you own a stock that's not going up in this market right now, your stock's a dick. I just want to tell you. That's it. That's all I got to tell you. Because, man, I mean, it really is. That conversation's so old about how it's just a few stocks making this market go up. What? My whole screen's awash with green. So if you got one that's not doing well, just dump it. Dump it.
Yeah. Reevaluate your process.
Yes, but yeah, I like a Dollar General. Doesn't mean I'm going to be buying it, but just like Best Buy up big, I'll look for a short because I still don't get how this company's in business. I go to Best Buy, hello. There's nobody ever there.
I had that experience recently. Trying to get someone to help me took me like 10 minutes.
There's nobody here to help you. There's no customers.
I've been to Best Buy like maybe once in the last couple of years. It was a lovely experience. I needed to buy a speaker, and they helped me buy a speaker. I use the speaker all the time. Fantastic experience. Shout out Best Buy.
But it's still just it's a showroom for Amazon. But I don't get how this stock
is not wrong.
Look, I don't understand how Crocs is still around, and I don't understand how the stock is $100. So again, I'll look for a short opportunity there. But Dollar General,
your kids are too old for you to understand, bro.
Right. Yeah.
I didn't understand either. My kids love them, and Mary tells me the same thing about her kids.
I don't get it. Yeah.
Yeah.
All right. On that note, enjoy the beach. ASTS to 2850. Hopefully, we all get paid. We all get laid. All right. Have a great weekend, everybody.
Adios.
You can't even bring him off the screen. Okay.
Kenny Glick,
my hand was shaking. I couldn't even bring him off the screen, and my hand was shaking.
All right, 91.41. I wanna talk about this Dollar General.
Oh my God. Yeah. Let's talk about it real fast, and then we'll bring on James Brodie. But
throw up slide 2. I've got,
holy cow.
the updated chart here. So what happened? Do their products like give cancer or something? What the hell's going on here?
No. Basically, going back to the conversation about beating and missing being relevant or not, here they are this morning. They missed on everything. They missed on every number, the top line, the bottom line. They cut their guidance. And so it's down 25.5% as of right now.
Which is that gray range there.
Yeah, everything was bad. The same store sales came below estimates. The margins are dropping. They talked a little bit about how their customer is under pressure. Financially constrained is what they said, but I mean, it was bad. Basically, there was nothing redeeming about this report. So, Dollar Tree trading along with it, I would add this morning, right? If you trade,
Dollar General. What's the market cap of Dollar General? Don't look. Guess. Go.
I'm going to be way off. I don't know.
30 billion.
20.
How much?
20, 15.
Wow, Strazza, pretty good guess. It was 27.
Oh.
Cut that by a fourth. This thing is down. Have you ever been to a Dollar General? I don't think I've ever even seen one. Is that the one with like the little man, like the little cartoon guy? Like
No.
General.
No, it's the yellow one. Go to South Carolina.
No. Go anywhere rural, JC.
Yeah. Okay. Yeah.
Go anywhere in America that's not near a major population center, and you will see at least one, probably several Dollar Generals and Dollar Trees.
It's all you see. You can drive for miles in South Carolina and pass nothing but Dollar Generals.
Why South Carolina of all
telling you,
places?
I don't
Not
know.
other states?
Ask somebody who lives there. I don't understand it either.
They got a lot of Dollar Generals. Is it like a dollar store where everything's a dollar?
Dollar Generals and boiled peanuts on the side of the road along the way, but that's it.
And also, JC, the thing about these stores is they only have one person working at a time.
It's a disaster.
Like there's one employee and like a dozen customers.
Oh, I like that. That's
They're
smart.
disgusting.
It's not smart, JC. It gives me anxiety.
It's terrible.
The stores are a mess. Take your kids there; they'll have a blast. They'll destroy the place. It's already destroyed.
Yeah, I don't think I'm ever gonna do that. They're from Tennessee, these folks.
What?
They're from Tennessee.
Who is?
I don't know.
Dollar General.
South Carolina.
Is there a difference? I mean, aren't they right next to each other?
I think so.
Yeah.
They're probably, yeah.
All right. Shall we bring on James Brodie?
Yeah.
New guest.
I think you should.
New blood. He sent over some charts. They're in the deck. Let's do it.
Crossing the pond. Yo, Jay, we've been friends for a long time. Make the call.
I mean, this is pretty professional, guys.
Nice show you got going here.
James Brodie, what a pleasure it is to have you here this morning, my friend.
JC, it's good to see you again. How you doing?
Dude, been too long, man.
It's been a while. I've known, what, 10 years I've known you? Back to the
Man.
CMC symposiums.
It feels like just yesterday we were, knocking back a few pops in Singapore, and now here we are, live on the internet. Look at us. Look at us.
I have to be clear, actually. I'm in the company recording studio, but you're not going to get me singing, not like the previous guest.
No singing. All right. Well,
I can't sing.
Yeah, we all have our talents, James. We all have our talents. And, you come to us from a unique perspective for a few reasons. You've lived in various places around the world, a lot of major financial hubs for that matter. So I think you bring some unique experiences. And also you come to us from a very quantitative Python, coding sort of framework, which, again, a different perspective than us and a lot of the guests that we have here. So I love the fact that you're here to chat. Glad to see you're doing well. Where are you now? You're in London?
Yes, Onyx Capital Group. So I was in New York, Tokyo, Singapore for 14 years. Then I was trading interest rate derivatives, OASs, IRSs, FX derivatives as well. And now with Onyx Capital Group, the largest liquidity provider in oil swaps. So it's fascinating looking at the oil and commodity market. To me, it used to be sort of Brent and WTI, but we're trading all the refined products, the geographical differences between the products, the Asias to Europe's to US, and the spreads between the products as well, between, for instance, the gas nap, gasoline and naphtha. So it's a fascinating market, and then overlaying with interest rates and the risk on, risk off, how markets are moving. So actually,
you're trading like a Brent WTI spread. You're trading heating oil, crude, stuff like that.
Yeah, here we trade all the refined products as well. Yes, absolutely. And we're expanding. We're doing a lot of systematic trading as well. We have some proprietary trading. So I came in originally to train up the new traders and work with the existing traders we have here. Now I'm doing a lot of work with external clients, training them up in the oil derivatives, for instance, the technical analysis, the behavioral finance. I have a weekly podcast as well on the global macro. Macro Mondays, it's called. And interesting one as well, I'm working closely now with a new head of performance, Chris Gooder, who's come from Formula One. So he was working with the top drivers for 8 years. And that brings that's a fascinating perspective. A couple of things. So he's working with the top traders here. A couple of things he's picked up on straight away is firstly the similarity between F1 and high performance sport and trading, all about decision making under pressure. But the other obvious one is he says you look at all the top sports people, the drivers, you look at the tennis players, the baseball, the pitchers, the hitters, they're all working with coaches. And the further you get in your career, the more coaches you're working with. But trading tends to be the opposite. People do a course and they make a bit of money, think they're an expert. So that's something that's a bit of a game changer here.
That's a great point. That really is a great point. you know, you look at Tiger Woods and, you know, the best golfers in the world, and you look at the best baseball players and basketball players, and you're right. They got more coaches than they've ever had before. That's a great point.
And especially seeing now all these fly-in-the-wall documentaries.
Yeah. No,
and it's the same
true.
emotions they go through, the traders go through. So that's interesting perspective. Plus, we get to talk about sport every day, so that's a bonus.
Haha, nice. So why don't we talk about current markets? I know you brought these are your charts there, Spencer. Are these his charts here? Slide 12, 13, those? Is that right?
That's correct.
All right, beautiful. So I love great. I love the charts that you brought along, James.
The first one, again, my background is say a bit more global macro, but I'll relate it back to the equities somewhat. But the first chart, I think, the biggest chart at the moment is the 2-year yield. That's the third. That's the Brent. We'll come back to that one. The first one, the straight 2-year yield, is that one. That's the one. You can see here there's a key support line. We're less than 20 basis points away at 365. You can see below that it's gonna gap lower. And the interesting thing with this and risk in general is we have the Fed meeting, what is it, September 18th, and the overnight index swap, which is what I was used to be trading predominantly, that's pricing 33 basis points of cuts by the Fed at the next meeting. Now, of course, they're going to go 25 or 50, which means it all comes down to pretty much payrolls next week. Interestingly, the Fed members in the last week, we had Jackson Hole, we've had other Fed speakers apart from Powell. They've basically said we're looking beyond inflation now. That's history. It's all about employment. And what they're saying to a person is that they're comfortable with unemployment at these levels. What are we, 4.3%? But they don't want to see it going higher. And why that becomes critical for this chart is because it comes down to payrolls next week, pretty much what they do. 50 basis points means, yeah, this would gap aggressively lower. 25 basis points means that support would hold. And if you look further out on the OIS curve, in the next year, we have 203 basis points of cuts. So the market's gunning for cuts. But of course, it comes down to it's a binary outcome. They go 25 or 50. So payrolls next week will be a big one.
Are you buying bonds, James?
Again, it's a tough one. It's a binary outcome, but I think there's value in it. It's trending lower. The key point, though, is wait till this breaks, because if this breaks, money's going to go rapidly into bonds.
And this is the one that's closest to breaking. Do I have that right?
Yes, definitely. And it's the most liquid as well. We also look at the 10-year a lot, and the curve's steepening, and that has its own story behind it.
Hold on a second. Is the 2-year the most liquid? Is that true?
It is, because it's the front of the curve. So it's basically reflecting what's probably being priced by the central banks, whereas the 10-year is much more driven by inflation or deflation concerns.
I hadn't really thought about that, because if you're having liquidity issues in the bond market, like you have too much money under management probably, right? I'm not there yet, James. I'm not there yet. Working on it. I can't wait to have those problems where I need to look for liquidity in the treasuries market.
But a great chart that this relates to is the dollar yen, the whole carry trade. Remember that blew up about 3 weeks ago?
Yeah,
Chart number 2 is the dollar yen, the currency against the interest rate differentials. It's about to come up.
Yeah, he's got it.
But you can see how highly that's correlated. So the dollar yen, it's basically an interest rate trade. And what we had, that's the one. You can see sort of 6 weeks ago, 2 months ago, the correlation broke down and people were saying there's a yen currency crisis. And at the end of the day, then the yen did a surprise move, the BOJ. We've had the central bank the Federal Reserve starting, or the market pricing aggressive cuts. And of course, the yen carry trade blew out. But again, this comes back to the 2-year. It's a yield differential. So if the Fed were to go 50, that would be because the data's weaker. That would mean dollar yen lower, and we'd see more unwinding of the yen, the whole carry trade, which would effectively hit equity markets as well. But that's a good correlation.
Let's talk about this relationship. So if the yen is strengthening and the bond market is strengthening, you're looking at a weaker dollar, falling interest rates. It's a positive for stocks, James?
This one we could argue about all day, every day, because
we do actually.
I think the way I look at it is anticipation of cuts is positive for equities, but when cuts come, then that's negative for equities. There's a statistic I talk about a lot when I'm doing the presentations around this, that since going back to 1970, the low of the S&P is typically on average 175 days, so 6 months after the first cut. So typically when the central bank's cutting, that's because there's a recession. The 2s, 10s is steepening, which also is typically when equities fall. So if the Fed are going to be cutting 50, it's on bad news, and in my view, that would be bad for equities. If the Fed are only going to cut 25,
James, let me stop you for a second. Can you? And I'd love to hear your thoughts, because you come. I mean, as global macro as I might be, you come to this, from even a more aggressive perspective. When we're looking at falling rates potentially and falling dollar, and we're looking at the relationship with the equities market, is it a fair comparison to compare the last 20, 30 years to perhaps what was happening in the back half of the 60s and the 1970s, and that sort of inflationary regime that we had then, that some of those relationships these days remind us of those days? Can you talk to us about how you think about all that? You think don't think that way, it's all the same thing, or do you think there are different regimes where these relationships have shifted over the decades?
Personally, I think there's different regimes going back to Greenspan, because what's happened since Greenspan in the early 2000s is you went to zero interest rate policy, and the central bank, the Fed, were happy to aggressively go back there, and then of course quantitative easing as well. So that's been a great support tailwind for equities. But the other thing as well is equities tend to go higher and retail aggressively buy equities. So that's a big change from the 70s, 80s, and 90s. But the risk, what I've seen in the last few weeks, and again, my background is I'm not an equity expert, is I'm seeing that the hedge funds are unwinding positions, especially since the carry trade blow up of 3 weeks ago. So hedge funds and the sort of smarter money professional money are exiting positions. We see that from COT data, but retail are getting straight back in, and there tends to be what did Greenspan say, an irrational exuberance when it comes to trading equities.
Yeah, he said that a few years too early there, Mr.
He did.
Greenspan.
He did. But so for me, it comes down to 25 would be the Fed's not concerned about imminent recession. They're Fed policy at the moment is tight. They're reducing that tightness. If they're to go 50, then there's be more concerns about the economy, and that would be a drag for equities. That's how I personally see it.
No, I respect that. That makes a lot of sense. Someone like yourself, Singapore, Tokyo, London, Hong Kong, I think you said too, right?
I was Hong Kong briefly, also Sydney briefly for a secondment as well. That was fun. And Zurich. Wow, what a good time.
Amazing. And then here we are having a conversation about global macro, and you're talking about U.S. payrolls. You're talking about, U.S. numbers. You're right. From a global perspective, how do you are you only focused on U.S. economic data because that's what's moving markets? Where does that fit in the whole construct of the entire world? Especially from somebody who doesn't live here in the United States, all we're talking about is the United States. How do you think about that?
An interesting perspective. Now I'm looking at more the oil and commodity markets, focus much more on China as well. And if you look at oil, the US economy is 26% of global GDP. China's 17%. So there you suddenly got 43%, nearly half the global GDP. So that's what we focus on. Germany's really struggling. I read yesterday, GDP in the last 6 years has only risen 0.4%. And of course, they're struggling particularly because of cheap energy from Russia originally. Their car industry is getting decimated by electric vehicle imports from China. But at the end of the day, that's pretty insignificant. It's all about the US and China. And both ISMs or PMIs, I should say, are both for manufacturing are both below 50. In fact, across Europe, they're below 50. The only country that's really performing is India. Service is strong still, of course, that, but that's what would be concerns. What I see, this is from more of an oil perspective, but without a doubt, I remember living in Asia, And I was trading then. I was trading yen rates, predominantly in New Zealand rates. You'd come in the morning and you'd see what's happened in the US overnight, and that shapes the open for Asia.
We do the opposite. We wake up and see what happened in Asia overnight, you know. Of all those places that you lived, what was your favorite?
Oh, tough one. Yeah, they're all very different. For families, Singapore's an incredible place and just booming now. We're opening or expanding our office aggressively there. That's a huge center for Asia. Tokyo, the food, the skiing, the people, you would love it there. That's
I
awesome
do
as well. And New York, yeah, what a great place. I traveled all around the America. That's great as well. So I love them all. Perfect answer.
What about Hong Kong? Hong Kong's a good time.
That's a bit crazy, actually. I can only manage a weekend there now. I know I'm back in London.
That's all you need. It is crazy. I've had some good times in Hong Kong. Lang Kwai Fong at 3 o'clock in the morning. Oh, forget about it.
Monday morning, get me out.
Yeah, right. Getting some questions on natural gas. Great question. You know, down near like, you know, levels where historically picking up some natural gas down here has paid off very well. Doesn't necessarily mean that it will this time. But man, we're down here at these levels where, you know, if you've been buying over the last 25 years, you've been rewarded, haven't you?
Excellent. Well, yeah. What's great with these levels, you look at them historically, it's all very well buying when the historical lows, but really wait till they start to tick up. That's one thing I found with all the back testing I did. Okay, nibble at it if historically lows, but have a stop and then wait till it starts to move in your direction and then jump on board. The whole thing, I've done all the back testing I've done and nearly 30 years of trading. At the end of the day, trend following, finding the time frame that suits you and wait till it starts moving in your direction and then scale in. That seems to be the way the big rewards are made.
Throw up slide 2, please, Spencer. When you say wait for it to start going up, like I agree with that completely. I just have a hard time being able to quantify what does going up mean. Like at what price are you looking at like a long-term moving average crossover, which I love these like monthly MACD crossovers for something like this. I never use MACD crossovers, particularly, or I shouldn't say never. I never use monthly MACD crossovers, but for long-term charts like this, where we're looking for wait for it to start going up, I do like that. How do you think about it? What does that even mean, start going up?
I tend to look at shorter moving averages, keep it really simple. Yeah, 5-day or 8-day, 8 days more, maybe what with back testing, seeing where CTAs start to move. And so looking at that, again, we have a lot of market making here as well. They're tending to look at shorter time frames. If you're looking at intraday, something like the 4-hour chart, but on a daily chart, 8 days, something I look at and just wait till it starts trending up and go with it. It means you'll never get the tops or the bottoms, but yeah, in 30 years of trying, I've not got a single one of them.
Yeah, even if you try, you're still not going to get it, so don't even bother.
Absolutely.
Throw up the gold chart, please, Spencer. You know, we're technicians, trend followers, all of those things, and I see gold making new all-time highs. I've studied every bear market and every downtrend in history, and all of those. You know what you're going to find? You don't see a lot of new all-time highs in those downtrending bear markets, right? So is this that? What are we seeing here?
This is a great chart, and it's one. I highlighted this when I went first on our podcast here, World of Oil Derivatives, with our CEO Greg Newman, talking about the imminent breakout of gold, and when it starts to break. This was in January. When it breaks, everyone will jump on board. And basically, the dollar's been getting weaker, but it's not so much that. It's the fact economic data has been getting weaker. But we've seen China, the central banks, increasing purchases of gold. Also, a big one is in China. Here's an interesting statistic or fact I've noticed when living around the world is, for instance, in the US, retail trading is much more aggressive in the UK, and people have their 401k plans. But if you go to China, it's absolutely wild. Everybody is trading there. It's a form of gambling in effect. And what you've seen with the house prices in China, I mean, the data came out recently, house prices are down 8.2% year on year. But over 70% of personal wealth is in property. So people are shunning that now. Where do they put their money? And we're seeing retailer now aggressively buying gold in China, as well as central banks. Was it Poland's central bank have come out this week? They're the biggest buyer last month, and they've saying they're going to increase their reserves into gold. So you're seeing all these fundamentals behind it, but then it all comes down, as you know well, to the price action. And it keeps breaking higher. It's back tested. I think the support now is at 2470, and it's breaking higher. And it's like, if you look at, historically Darvas, the turtle traders, what did they do? They brought stocks, but stocks that were breaking higher and all-time highs. And you've got a tight stop loss behind it. As the economic data is getting weaker, the dollar's been getting weaker, central banks are now cutting rates, then dollar's the place to be. Sorry, gold is the place to be.
Is this U.S. dollar about to fall apart, James?
Again, it's just an interest rate play. And what you'll see is, the Fed cut rates, but then the ECB are going to have to cut rates as well. The US is a far stronger place than Germany, for instance. So it's not going to fall apart at all. It's just a repricing of the interest rates. And there's another chart, one other chart, if Spencer has it. It's Brent, so crude oil and the 2-year yield. And again, it's another reason why I think the 2-year yield is so important, is because there's so many correlations with it. The whole risk on, risk off theme. It all comes down to what's happening with the yields, the Federal Reserve, and the upcoming data. That's it. That's the 2-year yield and Brent. An interesting statistic with this one as well. So we're the biggest swaps trader in all derivatives. So we have COT data, which is T-2. So ours is far more accurate, far more timely than the CFTC data. And a couple of times we saw this. We've seen this in October last year with the sad events going on in Israel when there's an attack from Hamas. We saw it about 6 weeks ago again when Iran sent the drones over the weekend to attack Israel. And what you see is the short-term news sends Brent higher, but then actually it just gets sold into. And it's being sold into because of the whole recession, the reduced demand for oil. And what we see more interestingly with the COT data is we see speculators getting longer, but we see the CTAs actually reducing their longs and then going short. And that's a huge telltale. You can see the price action going down. You can see the CTAs changing from being long to short. And you see the speculators being caught effectively with their trousers down, having to get out their positions rapidly.
What's the, I love that you brought up the COT report. What's most extreme right now, energy or otherwise, that catches your attention?
From what I've seen the last few days, actually, the big interesting part, I think, is more the retail actually being long of equities while hedge funds are unwinding their positions, which concerns me for retail. And I
which
think
concerns you for the equities market.
Yeah, this is equities. Yes, absolutely.
Yeah.
And people, I feel, and behavioral finance, and when I was on the board of the CMT Association, one thing I helped to bring into the exam was behavioral finance. That is so underplayed. And I feel retail gets this, what's the word, overconfidence. We've seen it with Bitcoin. We see it so often. And I feel we're getting that a bit with Nvidia. In April, Nvidia, Supermicro Computer, they were both going up aggressively. They both look fantastic. Looks what happened to SMCI. It's down, I think, 64%. So people forget that you need to be taking profit. And while equities may be starting to go down, or certain equities, there's always something else you can go into. Bonds are going up as yields go lower. Gold's going up. There's also always something you can rotate into.
I love the fact that you brought up the behavioral stuff. We try to do the best we can around here, bring on, we got to do a better job of that, because this is a topic that's near and dear to my heart. Any books that you would recommend on the subjects of behavioral finance?
Yes, one's come out recently by Stephen Goldstein.
Yeah.
He's very, very good.
Isn't he in London? He's in London, right?
He is. I used to work with him, actually. He was a prop trader at Credit Suisse back in the day.
What's the name of the book?
He is the Alpha Mind podcast. So I forget the name of the book off the top of my head. Behavioral Investing, and there's another great one by James Montier.
Is it The Mental Game? Is that him?
Yeah, that would be it. Steve Goldstein, yes.
Yeah, here it is. The Mental Game of Trading by Steve Goldstein. Here it is. Here, we'll put it up on the put it up at slide 2, Spencer, if you want to throw that up there. I'm ordering it as we speak. I follow him on Twitter. I
brilliant.
love all this stuff. You know, Annie Duke, Thinking in Bets, all the Daniel Kahneman stuff.
But I tell you, when I read the first one I read was James Montier's Behavioral Investing, and when I read it, I laughed and cried the whole way through because every single bias I could relate to myself. Every single one of them. It's so hard not to get caught up in it. It's an emotional game.
The first one I ever read was Investor Psychology Explained by Martin Pring. Because I had you for the CMT 20 years ago.
Yeah.
That's what got me going. So shout out Martin Pring. One more thing. I hate to keep harping on this US dollar, but I got you here. Spencer, can you throw up slide 3, please? This is the US dollar. I mean, man, we're down here near support. It's been in a range. And I'm looking at the dollar index. I know there's a lot of euro in there. I'm looking at emerging market currencies. You know, a lot of strength that we've seen out there. I mean, if this dollar breaks.
Yep, again, if you overlaid that with the 2-year, you'll see it's a really tight correlation. It comes down to its yields, and it comes down to effectively payroll and then the Fed.
Yeah, I'm totally with you. That's exactly right. So if the yields are falling here and the dollar's falling and bonds are going up, you don't think that's good for stocks?
It depends why they're falling. If there's a recession, if we go to a hard landing, then that's not good for stocks. If all it is the Fed just cutting by 25 to get to a more neutral stance, then that's good for stocks, in my view.
So you think the Fed's going to tell us whether the dollar's falling for good reasons or bad reasons?
Yeah, absolutely. I think it's 25 or 50, and that will tell us they're either concerned or they're just reducing what is a tight.
So so they cut 25, throw a party. They cut 50, curl up into the fetal position.
Yeah, maybe that's extremes, but yeah, basically that's sitting there. But of course, if they cut, of course, and if they cut 50, then the other central banks are going to have to start cutting as well, which would mean the dollar index isn't going to go down as aggressively as the 2-year.
Best restaurant in London, James?
Oh, I would say home cooking, but if not, it would have to be Hawksmoor Steakhouse. There's one in New York as well.
What's it called?
Hawksmoor.
Hawksmoor?
Hawksmoor Steakhouse, yes.
Hawksmoor Steakhouse. Oh, yeah. Hawksmoor Steakhouse. Look at this. 22nd Street. Okay. Wow, look at this place. This place looks really nice. Hawksmoor Steakhouse and Cocktail Bar. Sounds like my kind of place. Beautiful. James, you're the man, dude. I really appreciate you being here. Congrats on everything. Let me know when you're back in the States.
Will do. JC, good to see you. Thanks very much.
Adios.
Thank you,
Spencer. James Brodie, ladies and gentlemen. What a treat. What a treat.
My Charles Barkley jersey just came. Would you like to see it?
Your what jersey?
Charles Barkley jersey. I think you're like 40 years too late.
I got really into the Olympics. There was a moment like last month where I was really into the Olympics, so I ordered.
Wow, that is nice, dude.
I think it came all the way from China because it took like 4 weeks.
Wow, that is nice, Strazza.
And then, so have you gotten involved on this website, Mercari? Either of you guys?
I get my website recommendations from you guys as far as shopping goes, so no.
Mercari, dude, JC, you'll love it, and you will too, Spencer. It's like eBay, but just for sports stuff. So I stumbled upon this, and
Nice.
Wow,
get it.
that is ugly. Wow, that is something.
But
It's
really
not ugly.
good.
I like
Dude.
it. How do you spell
Bulls
this
and
website?
Charles Barkley were my favorite in basketball growing up. I mean,
MER. I miss 90s.
I got it. I found it. Mercari. Okay.
It's cool though. It's I mean, pre-worn for
Can
sure.
we bring in Sean because this market's opening? I want to talk about this options trade.
Sean is not here.
Sean, come on in, buddy.
This is the last thing I need, Steve, is another website.
Yeah,
spend
I've
money
already
money
wasted
on.
a ton of money on it, on
Jesus.
things that I
don't need that.
I would argue that a Charles Barkley jersey is not a waste of money.
You know what? You're right. That will be worn. I wear jerseys down here.
Yeah, and it's an original Dream Team jersey. So that is called an investment.
Original from China.
Original from China. The
real
best
fast,
was when the Trump MAGA hats were made in China. That was the best. Those were fun. That was funny.
Real fast before Sean, can we bring up Affirm? Can we bring up some charts? We got Affirm here,
Sure.
which is blasting off this morning.
Other companies still report earnings too, guys.
Yeah. Patrick wanted to talk about this
How
one
dare
yesterday.
So this one's
25% today.
Wow.
Affirm.
23%. Excuse me.
Wow. This is the same thing. This is buy now, pay never, right?
Yeah,
Upstart kicked this thing off. Look at what Upstart's been doing for a couple weeks now.
great call.
You know, Upstart told us this was probably about to happen. These two charts aren't supposed to look that differently for that long.
Affirm is on their way to profitability. They are only losing 14 cents per share based on last quarter's numbers. So going in the right direction. Estimate was way below that. So, and they raised the guidance too. So like I said,
just talk about how this is the same goddamn chart and the same goddamn formation that we keep seeing again and again and again. Come on.
Yep.
This is it. This is why we're buying bonds. This is why we're buying a lot of these stocks. They look like this.
Yep. You're right. Real estate. Is that it, Spencer?
Looks like this. Yes.
Are you good with earnings, Spencer? I would just want to touch on
a couple more. I mean,
yeah.
I want to hit on Salesforce because so actually Salesforce is green today. It's up about 4%, right? But this company scares me, man. I mean, the numbers were okay, but another headline not related to earnings, Klarna came out and said that they have stopped using Salesforce. They're replacing Salesforce and Workday with AI, basically, right?
Good.
So I don't know. The CFO is leaving as well for Salesforce.
Yeah, why? Where's he going? I saw that.
I don't think they said, or at least I didn't see. But
Guys, the CFO is leaving. Is that usually a good sign?
No, like he better be going to Microsoft or Google. You know what I mean?
I think it's a she, but
or she,
yeah, I don't know.
whatever.
I mean, I don't know, but the numbers were okay. I mean, it was a beat and a beat, and on the guidance, and a beat and a beat on the earnings. So, you know, stock is up, like I said, but it just scares me. I don't know.
Throw up slide 2, Spencer. I don't know what is it that you're so scared about. First of all, can you throw that up? I don't know what's so scary about this.
Because a lot of companies are maybe
I get it
reassessing their SaaS spend in light of the AI revolution.
And this is one of the most expensive stocks in the market, at least in terms of the mega caps.
And one of the most expensive pieces of software.
I mean,
Yeah.
this thing's
That's
$250 billion.
Incredibly
it's been an
expensive.
absolute beast for a long time. Long-term uptrend, healthy multi-year consolidation after a historic run-up. Yeah, I don't know what there's to be so scared about. I'm gonna fade the pessimism of Spencer.
Fine.
I'm with you.
All right.
You're with who?
I'm with
He's
Spencer.
with me.
You're with Spencer on this one.
Yeah,
wow,
no,
I would have bet you would have been with me on this one.
This is a giant company that really has to deliver 50 times earnings. Holy cow.
Can we get back to something more important? Not these tiny little $250 billion companies. Can we get back to the $3 trillion company? Slide 12, please, Spencer.
Yeah.
$250 billion. What am I going to do with this? $250 billion. What is this? A company for market cap for ants? $3 trillion here. Fun fact, Nvidia is pretty much flat now. All the way back to, if my calculations are correct, all the way back to 124. So Nvidia, you want to talk about a nothing burger. This is literally a nothing burger. Nvidia down officially less than 1%.
They're killing these retailers. It's not Nvidia. I was segueing. Sorry.
So okay. Sorry. Do you want to segue and do your thing?
Is Sean here? Is Sean here?
I don't know. I'll tell you when he's here.
Calm down.
Sean is the one that yesterday was like, "Oh, get me in earlier tomorrow, guys."
They are just killing these retailers. The mall retail. They're killing mall retail here. We had the Abercrombie and Fitch and the PVH a couple days ago, right?
Mall retail killed itself.
This morning we got Victoria's Secret down 10%, American Eagle down 8%. What else do I have?
AEO? Wow.
I think, is it just those two? It might be just those two, actually.
Didn't Nordstrom just report too?
That was that was the other day.
Still around.
I mean, that's like department store. I'm talking about like mall retail, right?
The girls like Nordstrom Rack.
Yeah, they're killing it out here.
Rack. Victoria's Secret has never been a good company my whole life. It's been Actually, like really bad. It used to be ticker symbol LB. They split off
Right.
the Bed Bath and Body Works.
Yeah, because they used to have like these like beautiful women. Then they started putting dudes and like obese women. Like,
Somehow I don't
nobody
think
wants
that's
this
I
job.
don't think that's why, JC.
I'm
That's
pretty
a
sure
cold
that's
take.
what happened.
That's a cold take.
I don't think
It's not a cold take. I remember I used to look forward to the magazines coming in to my house when I was a kid and try
Hey,
to get them before my
JC,
dad
Sean
got
is
them.
here. Sean is here. Are you happy?
You know, and the other one too, the Federics of Hollywood. That was another good one. I was into that one.
Sean is here. Are you happy now?
Yeah, bring him in. Oh, what an ugly shirt you have on.
Oh,
I must be the only one who trades here. Sorry, I'm busy when the opening bell rings.
Oh,
wait. You're the one that said.
yeah, you're specifically the one that asked to come on early.
I said 9:35. I'm 1 minute late. Chill out.
2 by my count. Don't let it happen again. I love how the Gators quarterback doesn't know the name of his star running back. Love that.
You know why? Because they're not about the names. They're about the logo on the front of the shirt. That's
Yeah. Sounds like a great leader.
Talk all you want, buddy. We'll talk about it on Tuesday.
All right, Sean, you were up against the clock yesterday, right? On this Nvidia trade, or no, it wasn't like at the buzzer, but you
It
put
was
on
at the buzzer. It was at the buzzer.
Was that
Yeah,
the buzzer?
yeah, 100%. Sean,
We put
talk
it
to us.
on. Yeah, we
Let's
put
go
it
over
on
the
at
trade once
close.
again. Selling the 125 puts in Nvidia expiring tomorrow. Buying 2 contracts on the 115 puts. So buying 2 of the 115 puts, selling 1 of the 125 puts. And big nothing.
And it didn't
burger.
work. And it did not work.
Did not work.
So I'm looking at it right now. If I want to close this trade right now, obviously prices are moving around. It's very early. As you like to say, let's let them dance a little bit. But it's looking like it's going to cost me about $280, $275 to close it. So not a terrible loss, right? I mean, we collected $1.15 when we got in. Looks like it might cost me about $270 right now to get out. You know, we lost $1.50. Big deal. I mean, that sucks. But before I close this trade, let's talk about, we talked kind of at the end of the show yesterday about how the hard trade are the trades that pay, right? And the hard trade was to sell the at the money straddle.
Nailed it.
Which
Too
was
much
the
risk for me, but that was
Right.
the trade.
But just to finish that thought, we could have sold that straddle all day yesterday, the at the money straddle, for $14. And I'm talking about the 125 strike, but whether it was the 124 or 126.
And what's it worth now? Nothing.
If I were to close that 125 straddle right now, it cost me about $5. We could have collected 14 for it yesterday at the close, and today we could buy it back at 5. Now, you know, look, we didn't do the trade because we didn't like the risk reward. That's why you and I are not earnings traders, JC, because it's a hard trade, but that's why it pays. People do it. Now, every once in a while, you're going to get your face ripped off.
Hold on. I'm never going to go to an NVIDIA earnings, or for that matter, probably not an earnings of any kind, and just be naked short in both directions. I'm not going to do that. Like,
right.
I don't have
That's
to
why
do
you
that.
and I are not earnings traders.
I like sleeping at night. Some people don't like sleeping at night. Some people can't sleep at night. Me, I'm a hell of a sleeper. I don't have any issues at all. I'm good. It's time to go to bed. JC goes to bed. Close my eyes. I'm out. I wake up in the morning. No alarm clock. Like, I'm like a professional at this point.
Professional
if
sleeper.
I am naked short, calls and puts going into an earnings, I'm not going to sleep that well. I'm not going to do that.
And there's nothing wrong with that. That's why you and I are not earnings event traders, because you have to be that type of person. You have to be comfortable with unlimited risk. You have to know that every once in a while you're going to get your face ripped off. And that's just part of the business. And I don't like that. And you don't like that. That's why we don't do it.
No. Yeah. I mean, you're just like walking around landmines, trying not to step on one, right? Is what that is. And that's
but it's a
not
numbers
fun
game.
for me.
Here's the other point too. If you're going to do that kind of trading, you have to consistently do it. You have to do it all the time because it's a numbers game. You have to put on, 50 of these trades every earnings season because 4 or 5 or 6 of them are going to hurt you. But the other 45 are going to make money, and then you're going to be a net winner overall. But you never know which ones are going to be the landmines. So you have to do a lot of them. That's the other thing.
Yeah, and it goes back to that principle that we talk about all the time. Like, if I'm going to be naked short calls and puts, whether they're straddle or strangle, we really like doing that with ETFs. right? You're not eliminating all the risk, but man, you're eliminating a lot of the risk.
Absolutely. ETFs are the way to do it. So I'm going to try to get out of this Nvidia trade here. The price is continuing to go against me here. It's now it's going to cost me about 325-ish, especially as Nvidia's starting to sell off. Oh, there you go. My camera just did a little funny thing for you.
Nobody wants to see that shirt of yours, Sean.
Look at that. Look at that. It's gorgeous. All right, I just got out. It cost me 335. 335. So
Sean. We'll get him next time.
Yeah. Hey.
Look, a conservative trade. It was a more conservative trade. But if Nvidia would have gotten the crap kicked out of it, this would have made a lot of money. If Nvidia would have gone up a little bit, it would have made some money.
Right. So look, we lost 220. All right, we lost 220, and this is important to bring up because there were some people in Twitter last night talking to me about this trade, complaining about the risk to reward. You're like, you're risking $10 to make blah, whatever. And I had to tell people, theoretically, we're risking $10, but we're only going to lose $10 if two things happen. Number one, Nvidia pins the long strike, which was the 115 puts, right? At expiration, it closes precisely at 115. The odds of that are pretty darn low all by itself. But that's number one. Number two, we would have to have held this position all the way until tomorrow afternoon's expiration, which I had no plan on doing. I plan on getting out this morning right now like I just did.
No matter what.
Yes, theoretically, there was $10 of risk in the trade, but I wasn't going to get anywhere close to that. And this is a perfect example of that. The trade didn't work. We got out. We lost 220. That's about what I expected to lose if we were wrong in this trade. It's all right. But if we were right, JC, like yesterday afternoon or evening before Kenny was talking about the VWAP cross, right, later in the aftermarket, when we were at those lows, this trade was looking great. It was looking like we were going to make $3, $4, $5 on the trade, which would have been great. It would have been a great outcome. But hey, it didn't work out. It's okay.
Yeah, not a big deal. Can we do we have any hot corner, any big transactions that we need to take note of? Because a lot of things slip through the cracks when there's big news that everybody's focused on.
How about the GameStop press release?
That was funny.
We had a GameStop press release, and we had an insider buying $8.7 million of this PBF.
Yeah, but that's nothing. That's not new.
That's Control Empresarial. Yeah, it's one of these funds, right?
They keep buying it. Yeah. They've
been buying it. 8.7 million. It's not nothing.
They're building a Jerry Jones type stake.
By the way, another Bill.com transaction form 4. A lot of insiders are buying that one. Didn't the CFO buy the other day?
That's the biggest one today. Yeah.
All right. Can we get into all of this? We'll talk about GameStop. We'll include the GameStop filing, and we'll talk about the form.
I still have the thing I want to talk.
So hot right now.
Strazza, tell us about the GameStop shenanigans last night. Stock's up, by the way.
Yeah. It was down in the aftermarket just a little bit. It's like nobody even saw this. They put out a press release announcing that their credit facility has been terminated by the lender, so that they will need to rely on operating their current cash balance and operating cash flows, which there really aren't any, to sustain their business in the future. And the market.
Is anyone surprised? Is anyone surprised?
And the market's like, that's fine. Listen, they do have a lot of cash, right? They're trading it. We've talked about this. Ryan Cohen is the portfolio manager, chief portfolio YOLO officer manager at GameStop. So they could survive for a while. And then what they'll do is Roaring Kitty will come out and he'll do a situation and the stock will pop 50% and they'll do a follow-on offering and they'll get cash that way. That's what they've been doing for 3 years now? 4 years now?
You think their strategy worked by dropping this filing when everyone's focused on Nvidia?
No more stock. What?
It sounds to me like it worked, their strategy of filing while everyone's focused on Nvidia.
It usually works. The Friday afternoon press releases, everybody comes back to their desk on Monday, then they totally forgot about it.
Good for them. Yeah. Good for them. Let's talk about this Bill.com.
Bill.com. This is the second insider purchase over the past 5 days here in the Bill.com. Some would say not enough. $1 million from an executive is a lot.
This is after three. Is this after $3 million from the CFO?
Yeah. So this would be on the more material side of the spectrum in terms of what we see from the Form 4 filers, at least. So Bill.com is one of these stocks that speculative tech, ARChy name. It's in our tech stack, which is never a good thing.
It's true. All the companies we use, their stocks are terrible.
It's kind of funny.
Like Slack, is Slack still around? No,
Slack
they got
got
taken
bought
private,
out.
right?
Slack is like the one success story, but if you look at the chart before it got bought out, it really wasn't a success
I was
story.
gonna say, I don't think that was a success story.
Yeah. Remember that ticker symbol work? I missed that. So Bill.com, look, you could draw a trend line here and say maybe it's breaking. You could draw a couple different trend lines. Some are breaking, some are not breaking. It looks like at least it's not breaking down. Maybe we look back at this one in the future and say, wow, what a nice rounding bottom, but it needs time. It needs time. Next nav is a nice chart. Throw up the next nav. That's another big Form 4 filer, 1.7 million. NN, we have this chart.
Yeah, NN.
I don't see it.
No NN.
No NN.
Next time.
So NN is just under $1 billion.
Oh, there it is.
There it is.
One of those. So my favorite non-tops are coming out of primary trend reversal patterns.
Doesn't this look like Palantir, Strazza?
Yeah, it does. It looks a ton like Palantir, actually.
It really does.
IPO'd a little bit later, but sure. So hold on. You could draw a horizontal line around, I don't know, 350, late 2023 into Q1 of 2024. And that would have corresponded with the breakout level of a nice little rounding bottom pattern. Those are the best tops to fade. Either the first top coming out of a primary trend reversal or the second top. This would now be the second one. These are the tops that we want to fade all day. Hasn't even gotten back to its IPO highs, which are the same as the prior cycle highs, right? So this is a great, probably not a top setup here. And
I mean, listen, this thing's based in Virginia. It could very well be a Palantir style situation. I mean, the proximity to Washington, D.C.
Depends where in Virginia.
Depends where in Virginia. Also true.
It stinks of political influence. Is that what you're saying?
Stinks of political influence. Looks exactly like Palantir, based in Virginia. Smells,
yeah.
Right?
Let's look this up.
I'm not saying that's a bad thing. Clearly, they've proven it's a good thing. So I'm just saying, like, it's a little fishy that it looks exactly like Palantir.
Virginia.
Oh, they're in Reston. That's right outside DC.
Yeah.
There you go.
They're probably a government contractor.
Yep.
Come on. You see, that's called fundamental analysis there, Sean.
Yeah. You're not wrong.
That's what it is. I got a good recess that I want to address something in the chat.
It's a great business. We're not ready for your recess. Okay?
All right.
We got 11 minutes.
Nobody's ready for my recess.
No. It won't be as good as mine the other day. I forgot to show you guys. This is the local paper from the Everglades. It's called the Mullet Wrapper.
Wait. Hold on. Keep it up. The Mullet Wrapper.
So the name of the newspaper in the Florida Everglades is called the Mullet Wrapper.
In fairness, that's a fish, right? That's a fish.
It's a fish. They're not talking about the hair. Good point, Sean.
I think it's a play on words. Let's be serious.
But this is real.
Corn and big process.
Okay. Nvidia. One of the big risks to a company like Nvidia is concentration. And China was a big story. We all forget so fast with a company like Nvidia that's doing so well, right? But China, they were overly concentrated, their sales to China. 20% this time last year. 20% of their revenues came from China. You could throw up the tables. I got you some nice tables there. So 20% of their revenue this quarter last year came from China. That number is now down to 12%. Right? So they're mitigating that risk in a big way. They want it to be a lower percentage of sales. No, wrong one. Sorry, we'll get to that one next. Right, so this has been the story. Like, big risk for Nvidia is those sales from China are likely to trend towards zero, right? They're growing revenues everywhere and everything that they do, not in China. That business is going down. So it's gone from 20% to 12%. That to me is a really good thing. That's comforting, right? It's becoming less material, still material. However, the real problem with Nvidia in the future is going to be their concentration risk with their largest customers.
I knew you were going with it. I knew where this is where you were going.
No one is talking about this. I just, like a huge loser, went through the whole report here this morning during the show. This footnote stands out a ton. Put up the concentration risk by customer. This is insane.
Super micro.
Right. No, but it's probably Google. Apple, Microsoft. We can't name names here, right? We got customer A, customer B, customer C, customer D. Last quarter, I'm sorry, over the 6 months ended this quarter, they had 3 customers that make up 10% of their revenues for those 6 months. One of them was 14%. If they lost all of those sales tomorrow, that's a third of their business. Over the 3 quarters ended this quarter, 4 customers make up 10% of sales. They got $30 billion in sales. So I don't know, what's that, 12 billion? More than 12 billion come from 4 customers?
Supermicro is one of their largest customers.
Sure, definitely.
Who are the others?
It's Mag 7 stocks. Do you remember Microsoft's earnings report last quarter? They talked about how they're spending $10 billion building out AI.
Yeah. I don't remember that.
Right. So it's those guys. They can't go anywhere else right now. They can't go to AMD and make a deal, right? This is the only game in town. That could change. And this is incredibly material. They're not selling these things to everybody all around the world in huge quantities. They're selling a ton, billions and billions of dollars worth, to a small select number of companies that are trying to build out some massive AI capabilities, right? So if that ever changes and Microsoft or Google or Apple find out that they can buy other chips and have another company kind of build out their AI infrastructure, that's a huge risk. They are so concentrated at the customer level. I don't think I've ever seen anything like this, at least not at this scale, right? Doing 30 billion in revenue, but 12 billion comes from 4 companies. That's pretty crazy. So,
it's a really good point. They're not selling a few chips to everybody.
No,
they're selling a lot of chips to a few people.
Nailed it. Yeah. Right. So if I would imagine there's a board meeting going on at these companies somewhere, and they're saying, how the hell do we get away from Nvidia? Can we build these things ourselves? Can somebody else build them for us? Right. That'll probably happen. I think it's probably a long way out.
Well, isn't that what Apple's doing? Apple's building their own chips.
Competition's going to come. They're going to try. Right. And right now the market is pricing this in a way that no one's ever going to get there. Somebody probably gets close. And I'm sure that the landscape for Nvidia in terms of competition is a lot tougher in the future than it is today. Right today, there's nobody.
That's a good point, Steve. I also think we sometimes overestimate the abilities of these companies. Like we just say, "Oh, why can't someone else just do it?" Because it's not what they do. It's not what they do. Right?
It's hard. It'll take time, but they're going to try, and they have the money. Somebody like Apple, like you said, Sean, they have the money to try. They could take a shot. So
yeah.
It's not about the concentration to China anymore. It's about the concentration to their largest customers, and that's a big number. So,
all right, that was great. That was great, Steve. Thank you. I agree with all that. JC, you on your recess now? Is that what's happening? Yeah.
Yeah.
Okay.
Just want to address John Glover in the chat hating on New York City, calling it a dump. Well, you're probably hanging around in the wrong areas. Some of New York City is a dump. It's not like Gainesville, Florida, where like the whole thing is a dump, right? New York City has its areas that are dumpy and crappy, and you shouldn't go there. Like on the west side, like in the 30s, you know, like kind of gross and grimy, like on 7th Avenue, like anything near Penn Station, the Port Authorities. A horrible place filled with terrible people.
Listen,
like, yes, there are bad places. Don't go there. Go to the West Village.
You're from Miami, so you're not used to these big cities. New York City is a dump. I know it's a special place for a lot of people. It's undeniably a dump. Everyone knows it. Talks to people who live there. It's disgusting. It's a mental health.
Maybe where you go. I don't go to those places.
Yeah.
If I
go to the nice areas.
But hold on. Shout out New York City. Because you could do things there that you can't do other places. If I was there yesterday, I 100% would have been at one of these NVIDIA watch parties. Where else than New York City can you do shit like that? Have you seen the videos of these NVIDIA watch parties?
I saw them.
The friends we could have made if we were there last night. I mean, wow.
I have enough friends. I got too many friends.
So
it's always disappointing them.
But special place. What a special
place. It's a great place. And I've searched far and wide. I've never left Earth, but within Earth itself, I've yet to find a city that is better than New York City.
You grew up in one, but okay.
I grew up in what? Miami's better than New York City?
All day.
Stop it.
It's never been close.
Oh my God.
What a town.
Listen, Miami's great. Don't get me wrong. Shout out Miami. Hong Kong's great. Singapore's great. Tokyo's amazing. None of them are New York. They don't have to be, by the way. Everybody's like where was I the other day that I was talking about how great the city was? Where was I just recently?
Toronto?
Where?
Yeah, you were.
Toronto.
Oh, I was in Toronto. Yeah, I was in Toronto. And I was like, man, I love Toronto. And like Howard Lindson's like, yeah, but it's not New York. Yeah, fine. It doesn't have to be New York. Like Toronto could still be cool and I could still enjoy myself and the food could still be great. And it doesn't have to be New York. Right, Sean? Like you think you're Canadian, right? Tell me.
I'm proudly half Canadian. Proudly. Great place.
Are you just like making that up or do you actually have family from Canada?
No. I'm making it up, but I grew up 5 minutes from the border. So, and I went to Canada an awful lot. I mean, it was just like, going down the street. So yeah.
Love Canada.
And you were closest to Toronto.
Well, Toronto's the closest major city. I mean, Toronto's 90-minute drive from Buffalo. So basically Buffalo is an extended suburb of Toronto.
Right.
Crazy.
Yeah. Sure.
Yeah. Although it was a lot easier back when I was growing up. This is pre 9/11, right? So crossing the border was a hell of a lot easier back then. Today, it's a little bit more of a process. It takes the lines take a little longer, so people don't go as often because it's not as easy. But when I was growing up, you could cross the border with a library card, no problem.
I got to tell you, because I played baseball at Fairfield, so we would play against Niagara and Canisius every year, right? Because they were in our conference. So we'd go up there. And the first thing our coaches would tell us, be like, don't go to Canada, don't cross the border. And of course, when we'd get there, there'd be a line of taxis ready to take us to Canada, of course. So this was after 9/11. This was my sophomore year of college. And I left my driver's license in my dorm. And they actually let me into Canada with my student ID. This was after 9/11. This was actually just after 9/11.
Maybe just after 9/11, but before they created the TSA and all the new requirements. So maybe they're figuring it out. I got a funny story about that post 9/11. This is more like 2005-ish, whatever. I was living in Chicago at the time. I drove to Detroit. Spencer, you'll appreciate this. I drove to Detroit to see a hockey game. And I was with a Canadian buddy. He's from Toronto originally. And we after the hockey game in Detroit, we crossed the border into Windsor, which is Canada, just because that's where our hotel was. We got a hotel in Windsor. No big deal. Well, my buddy, who is Canadian and lived the majority of his life from Toronto, well, guess what? He was born in Iraq. So he had an Iraq nationality. No problem crossing the border. We got through, no problem. But for the next 7 or 8 years after that, anytime I boarded a plane, anytime I crossed a border, I was on some list. I got hassled every time. It was because I crossed a border with an Iraqi. That's why.
Wow.
Crazy. I mean, I'm good now, but for like a good 5 to 7 years, I had hassles every time I tried to board an airplane, cross a border, anything. I got hassled. It was crazy.
That's interesting.
I believe it.
All right, let's talk about something fun. Me and JC and Strazza, we're all going to be hanging out together in a couple weeks in California, at the beach, at a conference. I would like to have a friendly little wager with you, JC. There's a certain football game happening this weekend, Saturday. You might have heard about it. I think you've alluded to it already.
Let's just do a parlay. Canes over the Gators, Dolphins over Buffalo. I'll take that parlay all day.
What's the spread on Canes Gators? Do we have
2.5 Miami?
All right. I like where you're going with this. So here's what my thought is. If both of our teams win, so for you, if the Hurricanes win and the Dolphins win before we see each other in California, then you can find the most obnoxious gear for your teams to have me wear at Future Proof. I'll wear it. Flip side, if my teams win, JC, I'm going to find you the most obnoxious Bills and Gators gear.
I can't do it because you don't hate Miami as much as I hate the Gators and Buffalo. Like I'd rather be dead than put something like that on. I'd rather be dead.
Sounds like you have no confidence in your team.
No, if there's like an earthquake and one of our quarterback goes down and something happens, I'd rather be dead. Just
Strazza, wouldn't you love to see JC walking around Huntington with Bill's Zubaz pants? And
that's disappointing, JC. That's disappointing.
What I was thinking.
I'm not going to do it. I'm not even going to address this.
That's disappointing. That really is.
Oh, boo,
Kill me.
boo you.
Boo.
You.
If this,
I really hate the people of Gainesville, Florida. I hate everything that has to do with Buffalo. I refuse.
Well, there go our customers in those two places.
all right,
Tough shit.
really a bummer. Sorry to hear that.
Well, I'm
I don't
sorry to
hate
hear you have
many
no
things.
confidence
You guys
in your
know
teams.
I'm a very happy
That's,
person.
That's a bummer. You don't have no confidence in your teams. Understandably, I get it.
Hold on. I heard Canes are favored by 2.5. Is that right?
Yeah.
All right. And how about Miami, Buffalo? We have no indication of what that spread will look like. It's too soon.
It's in Miami, right?
It's in Miami.
Miami's gonna be favored.
It's in Miami.
It's in
Miami's
Miami,
favored
so
by 1.5.
it's in Miami, so it'll be a neutral field game because there'll be more Bills fans there than Dolphins fans.
Dude, the best part, can I just remind everybody, the best part of Buffalo, Miami, in Miami in September is these like fat people from Buffalo in the upper deck turning like red, pink, just bacon frying in like that 1 o'clock game in September.
This
Just
is
like,
true. This is all true.
You could smell the bacon frying, these Buffalo people. Haven't seen the sun in forever.
I'm not going to argue with that. You're only speaking facts. I can't disagree with that.
Speaking of Miami, Billy Joel leaving the Garden, coming to the Seminole Hard Rock Casino in November. I'm going.
You should go, man. Nice.
I think his MSG residency is over finally.
Yeah, that's a big deal. So now we can hang out with Billy in Miami. That's fantastic.
All right, I had a recess. We'll save it for tomorrow, though. We've already gone long. So it's Thursday. We got the jam session with Sean talking to options at noon. Sharp Request Live at 1. We'll see you guys there. Smash the like. Thanks to our guest James Brodie. Thanks for hanging out, everyone in the chat. We'll see you guys later. Go make some money. All right.
Go Gators.
Go responsibly.
All right.
I can't take no loss. I don't even know what it costs.